Welcome to Stock Talk with Nico Criticos. Today I'm going to show you the 7 stocks I bought in the month of August, and I'm going to try to give a quick explanation on why I'm bullish on the stock. A couple of these stocks I've already made full analysis videos on, so you can check that out if you're interested. And then a couple of these stocks I've made very small positions in just to keep an eye on. And then other companies like Target, I've made bigger positions in because I feel more confident in buying at that price, or just because the company is a safer company in general. So first one on the list is Target. Target has had some problems this year as far as inflation, as far as political problems, and as far as too much inventory. But I feel confident that Target going forward over the next couple of years is going to continue to be a dominant retailer. And I also feel like this is a good price to buy at. We're looking at a trailing PE ratio of 17, which is pretty much right around average over the last 3 years. So I feel good buying that one. Next one on the list is going to be Texas Roadhouse. Now, this is one where I have not made this into a big position yet because the stock has not dropped enough. So I'm just kind of, keeping an eye on the stock price to see what happens. But Texas Roadhouse is a very strong company, great numbers, great return on capital. If we go ahead and pull up the P ratio for this one, what we're going to see is that the P ratio is also at a pretty healthy valuation. So I feel comfortable buying, but not to the point where it's a giant position. We can zoom up here. We can see it's trading at about 24 times earnings, which is pretty much in the average or a typical range. So that is Texas Roadhouse. Then we get to the next one, and that is going to be another stock where I haven't made it into a big position, but I'm just keeping an eye on it. And that's going to be Nike. So I'm sure most of you guys are familiar with what Nike does. They sell shoes, clothes, stuff like that. And this one is a similar story to Target with the inflation, with the too much inventory, problems like that. So this stock has fallen quite a bit now from $130 a share down to $100. If the stock were to fall back down to this $80 to $90 range, that's where I feel comfortable making it into a big position. But Nike at 100 is still good. If we look at the PE for this one, we're going to see Nike is trading at about 31 times earnings, which is kind of in the average, in the middle, but definitely not a cheap valuation. So you have to keep that in mind. Then we get to the next one on my list, and that is going to be Starbucks. Starbucks, as you can see, I have not made into a big position yet. Same story as Nike. If this one were to drop more, then I'd be comfortable buying maybe, $3,000 worth, something like that. But at this price, I'm not comfortable doing that. As far as the PE ratio goes for this one, I think everyone knows what Target does. They sell coffee. They have a very great reputation, great profit margins, all that stuff. If we zoom up on the PE here, we can see that it's trading at about 30 times earnings, which is pretty much not cheap over the last 2 to 3 years, but it's pretty much in the average. So Starbucks is another one. Then we're going to get to CVS. And CVS is one that actually fell because the news came out a couple weeks ago that Blue Cross Blue Shield of California was going to drop them as a partner and start using Amazon instead, which this one I made a full video on. So you can watch that if you want my full explanation. But CVS, I feel comfortable buying in at this price. That's why my position is a little bit bigger. And this one pays a nice dividend. The P ratio looks pretty cheap. Not on this chart, it doesn't. But when you run the numbers for what they're going to do in EPS, it is at a cheap valuation. Then we get to number 6. Number 6 is going to be Bank of America. This one I've owned for a while, like probably close to 2 months now. And this one is like, there's lots of reasons why I'm bullish, but this one dropped, ever since there was all that kind of people were getting skeptical around the banks. This one dropped pretty big. This one is Warren Buffett's second largest position, which helps me feel a little bit more confident. But Bank of America is trading at a P ratio of only 8. And if we look at the chart for this one, it was going back up for a little while, and then it came back down. So I think I actually bought some more shares recently. But we are looking at 95 shares at $28, and I'm up. See, I'm only up 2%. So the good thing about this one, though, is it also pays a dividend. So you're also getting paid in the meantime. But this one, I'm also confident that it'll come back. So that's Bank of America. Then we get to the final one, which is actually my favorite. And this one I bought more of today. We have the U.S. largest beauty and makeup retailer, which is Ulta Beauty. So this one I have 10 shares at $459. And Ulta Beauty probably has, it's probably a similar story to a Target or a Nike. But this one, the P ratio is very cheap. If it will load, we will see that Ulta is trading at a 16 times earnings, which is pretty much the cheapest it's been in the last 10 years. So Ulta, I feel very confident in. This one has amazing returns on capital of over 40%. So I think this stock will get over $500 again, no problem. So those are my 7 stocks I'm buying. Let me know what you think. Thank you for watching.